Hello and welcome to Real Commercial Propcast, the commercial property podcast where we look to answer the most common questions for anyone on the commercial property journey, whether you're an investor, business owner, or somewhere in between. The topics we discuss are of general nature only and don't consider your personal objectives or financial situation, so it's always best to obtain independent advice before making any commercial property decisions. Hey there, I'm your host Tessa Ng and I'm the Head of Product at Real Commercial Australia. And as always, I'm pleased to be joined by my co-host David Story, who has spent many years in the commercial property industry working across all asset classes in marketing and communications. David, hello.
Hi Tessa, ready for another insightful session today. The first 3 episodes have certainly taught us and our listeners a lot about investing in commercial properties, such as should I invest? What sort of commercial properties should I invest in? What are the key questions to consider when investing? So I'm looking forward to today's topic and continuing that journey. So what are we talking about today and who do we have as our guest expert?
Yeah, so over the past few episodes, we've covered some great content on investing in commercial property. And today we're taking that one step further. So now that our listeners are equipped to become new investors, their focus needs to now shift to the point of view of being a landlord. So today we'll cover off the key responsibilities that you'll have as a landlord for a commercial property. And to help guide us through this topic, our guest expert is Ingrid Filmer, Chief Executive Officer of Burgess Rawson. Burgess Rawson is the largest privately owned Australian commercial property company, and Ingrid has over 24 years of experience in commercial property and is highly regarded as one of the industry's leading experts in commercial and retail management. Her leadership has resulted in the exponential growth of Burgess Rawson, most notably demonstrated by their 2021 record revenue result of $1.75 billion across 364 commercial property sales. Welcome, Ingrid, and thank you so much for joining us today.
Hi, Tessa and David. Thank you so much for inviting me here. I really look forward to this conversation.
Ingrid, thanks for joining us and looking forward to tapping into your insights today. Look, having a well-developed lease contract is vital to outline the responsibilities of both the landlord and the tenant. But could you just take us through the main responsibility a landlord needs to consider, such as, structural repairs, adhering to current legislation? And another interesting point that our listeners should be aware of is, who's responsible for the outgoings or costs to maintain a property?
Great. Well, the interesting thing, David, is that this actually varies widely by state. So what we've certainly been seeing in our market is that investors chasing yield and chasing tenants are now going all the way across the eastern seaboard and into Western Australia. As a result of that, it's really important to know the legislation that applies to your property in your relevant state. And things like outgoings and recovery of land tax and recovery of management fees all vary under the different acts in each of the states. So the first thing I think any investor needs to do is make sure they understand the geographical area they're buying in and then what potential legislation may affect them. The lease is incredibly important and a number of people don't read them. They're big, thick documents. So either take the time to read your lease or get the right people to read them for you and summarise them for you. Understand your obligations. So across most of the eastern seaboard, where a property is under the Retail Leases Act or the Shop Leases Act as it's known, that covers the majority of property that most people will be investing in the commercial space. Each one of those acts vary, and that also outlines for you requirements around your maintenance and what you need to do, whether you need to replace the air conditioning or whether you need to fix the roof, etc. There's some general themes across all property and across all of Australia, such as watertight, fair wear and tear, and generally landlords from a capital point of view are required to maintain the property in the same level as when the tenant took on the property. And what's interesting there is that the tenant and the lease sits with the property, not the landlord. So if you are buying an investment property and you've got an existing lease, you as a landlord take on those responsibilities and obligations that the tenant had the right to at the start of their lease. And that's something that needs to be really important. There's also a lot of obligations around disclosure statements to the tenant and making sure that you have asked the tenant and told the tenant what they're required to pay. So there's new legislation came into New South Wales which prohibits a landlord from collecting outgoings that weren't detailed in that disclosure statement. So if you buy a property, that disclosure statement becomes a really key document, and it gives you a clear outline of what you can and can't recover from your tenant.
Ah, yes, lots of detail to go in there, and I think I'm one of those people who would definitely need to hire the right person to help me read through those contracts, because they can be quite confusing. But as we do know, it is an unpredictable environment, and the pandemic has only highlighted that. So, for example, we did see new retail and commercial leasing rent relief laws come into effect during the lockdown to support tenants in those trying times. So for the future, what should investors consider in relation to market conditions and lease agreements so that they can be as prepared as they can?
So there's a couple of issues at play there. The federal government brought out the Code of Conduct at the start of the pandemic. From that, the state governments built out their own, what's called the Commercial Tenancies Relief Scheme. So each one, again, varies slightly by state. Now, we are looking to the end of this time, but as a result of these agreements that were in place the last 2 years, a number of tenants have deferral payments that could last until the end of their lease. So again, if you're purchasing a property, you potentially have deferral income that needs to be considered, and their tenant's ability to pay that. So I think in the future, their considerations that you're going to need to have is how you handle deferral income and how it's accounted for as return to a new landlord. We're also going to see changes where the deferral income needs to be paid out at assignment. So if a tenant is changing or selling their business, a landlord needs to be across those cost centres. And that's something we're going to see long term. In relation to the pandemic and how it's continuing with future landlords, we have certainly seen an incredible drop in the number of tenants who are able to apply for the CTRS, and therefore are still suffering that 30% required drop. Those tenants are really quite minimal now. So I think landlords entering the market into the future aren't necessarily being affected as much. Most of the property that Burgess Rawson sell are essential service assets, which means that the majority of our properties weren't affected by pandemic rent relief. And landlords are certainly seeking those properties. Properties that thrived and survived during the pandemic are hot. And we've seen some substantial yield compression. It's also coming off the back of the residential market no longer providing investors with the return they're seeking, together with legislative changes and increased house prices with rental not keeping up with the capital. We're seeing a lot of landlords move across into commercial from residential, seeking those returns and seeking tenants who were able to pay during COVID and thrive. So, all our childcare operators were able to continue to pay. Fast food, obviously, is become a darling. Medical, small dentists, vets, all of those properties are being sought out by investors, so that as with a view that they will not be affected by a pandemic in the future, and that they were able to show that they could thrive and survive in a pandemic.
Thanks, Ingrid. It's good to know that there was positivity throughout the pandemic, and it's continuing, and that strength is ongoing. I just wanted to ask, as a landlord, there's a lot to consider as you've entered into what is effectively a business relationship, with a client who is your tenant. And many of our investors are very busy people, and with the responsibilities that you outlined earlier, as well as the regular changes to legislation, no doubt you're going to have some legal help in there as well. But how does a landlord keep on top of their responsibilities and their investment, to ensure they can attract the best tenants? So if I'm a landlord, who can help me manage my investment or help me manage the responsibilities that I need to meet?
Thanks, David. So obviously Burgess Rawson manage over $10 billion worth of property up and down the eastern seaboard. What I would say to you is that property management should form part of your circle of genius. So a lot of investors or first-time investors think that they've just got their accountant or their lawyer. You should actually be considering your property manager as part of that set of circle of genius. Your property manager needs to be not just a rent collector. Property managers can really contribute to underpinning the value. So if you have a property manager who's just a rent collector and that's all you expect from them, then you could potentially miss out on major opportunities to underpin value and create wealth through your property. And that could be through lease negotiations, the way you handle assignment. Market reviews are a very, very good example of that. So what I'd say to you is don't consider a property manager as a rent collector. There's so much more. But also find the right property manager. For example, with Burgess Rawson, we're one company, but we have property managers based in each state who then have state relevant knowledge. Again, we see a lot of landlords who are using a single lawyer out of a single state who then don't necessarily have the knowledge of the individual states. So it's really worthwhile, I think, having local knowledge, having the state-based legislative knowledge, but also using your property manager as part of your business consultancy, ensuring that they're across your lease, opportunities for you to improve value. And that could be anything from solar panels on the roof, to negotiating a better tenant or splitting a premises. They're the kinds of things a property manager can help you with. And if you are a first-time investor, I implore you, don't think that your accountant or your lawyer or someone will look after it. You need experts in each area. And that's what I would say that the role of a really good property manager is. And they create value, and they ensure that you maximise your value opportunities.
Thanks, Ingrid. I like that. Circle of genius. That's a phrase that's going to stick. Just considering that circle of genius, I mean, we've mentioned the property manager. We've obviously talked about the legal assistance you're going to require. Anyone else that a landlord should have in that circle of genius?
Certainly, good relationships with agents. So again, if you're just looking at listings on a website, every listing looks glossy. Every listing looks great. So you need someone who's going to be able to be honest with you and understand your investment requirements and your investment needs. Now, if you are chasing a high yield, you're going to need to expect that there's going to be a greater deal of risk associated with that property. If you are, chasing more of an annuity income, then you're looking for a very, very different property. So I think it's really important to have relationships with agents that you can trust, that you can have open conversations with, and set your parameters, because there is a property for everyone. But if people don't know what you're looking for or what your touch points are or triggers, then they can't help you. So if you are looking for that annuity style income, you're looking for a 10 or 15 year lease, that's a very different property to someone who has a vision to add value or may wish to redevelop or split the tenancy into multiple tenants. So I think certainly your agent, and also they are regularly aware of property coming on the market that you may not be aware of yet or hasn't even hit the listing websites yet. So that gives you an opportunity to be on the front foot and do your due diligence nice and early and get your bank finance in order. So I'd say that. The other one obviously is valuers and leasing agents. So if your tenant leaves, you need a quality leasing agent who understands the location, the property and the tenant type. So if you're trying to find a fast food, you need an agent who has relationships with fast food tenants. And that goes for all styles of properties, so that's very important. Valuers, you may never speak to them because your bank organises the valuation and it comes in and you tick a box and you never speak to them again. Valuers are an incredible source of information. And again, having a relationship, whoever did your last valuation on commercial property, giving them a call and having a wider chat about the market, I think that's a massive benefit. So I would say generally, if you want to be investing in property, the wider your circle of genius and the more people that you can get that advice from, the more educated you're going to be and the less likely to make a mistake and also the more likely to create value. And that's what everyone's looking for. It's the Australian dream.
That's excellent advice, Ingrid, and that wraps us up for another episode. So thank you so much for joining us today and sharing your insights with us. It just goes to show that there is so much that goes into getting the most out of your commercial investment, and if you spend the time to manage your tenants and that lease and get that circle of genius intact, and effectively make sure you've got all your bases covered, it should hopefully set you up for a smooth and very successful investment over time. But thank you so much, Ingrid. It's been really great having you on today.
Thanks so much, Tessa and David. I've really appreciated your time and I look forward to doing it again.
If you're hungry for more information on commercial landlords, you can check out our news section on Real Commercial. We have a few great articles on there on that exact topic, so I'll link the show notes in there below. But otherwise, thank you for joining us for another episode of Real Commercial Propcast, brought to you by the #1 address for commercial property, realcommercial.com.au. Don't forget to subscribe wherever you listen to your podcasts so that you never miss out on a new episode. Catch you next time.